Robschild, nothing I say is investment advice. Welcome to the show where we view financial markets through crystal ball gazing. JP Morgan once said millionaires don't need astrologers, but billionaires do. And so we begin. Today's Friday, May 31st, 2024. The PCE data came out today. Everyone was waiting to see what would happen with this, including myself, thinking, well, hey, we're trying to figure out when the cuts are going to be starting and, what's going on here. The Fed's has been strangling the economy forever. We've just been kind of like waiting to see what happens, and nothing happened. The expected numbers were exactly what the actual numbers were, and then from the last they were flat across the board. So not only did we meet expectations, but from the last reading of this it was exactly the same, well, except for the core. I guess we went from 0.3 to 0.2 again. There's a little bit of seasonality at play always, and so you can't really always use the last reading to the current, but the bigger point here is that none of these readings were higher than expected, and who knows if they come out with a revision, maybe the revision's actually lower or higher. I don't know. We'll see. Again, the biggest piece of data I'm personally looking for is next Friday. I'm going to talk about it every show until it happens. The unemployment rate is really important, and the most probable thing that it'll do is not surprise anybody. It's been ticking up up 2 clicks, down 1 click, up 2 clicks, down 1 click. The last reading was 3.9. I think the market's predicting 3.8 at this point. And so in all likeliness, it'll be there and will keep drudging sideways. The markets are getting a little boring right now, as they typically do, unfortunately, in the summer, right? And a lot of times, a lot of people have a little more time, common people have a little more time to look at markets and stuff in the summer, and that's the most boring time to be looking at markets because, a lot of the professional traders are home and nothing ever happens, it seems. It's part of the whole sell in May and go away deal. From a weekly perspective, the S&P 500 closed slightly lower than last week's doji. I said this doji could represent a potential top here, but this long tail at the bottom here, says that it can actually give it direction up, but, it looks like, I'm guessing I might not be alone waiting for this unemployment information coming out next Friday, but again, boring, sideways. Everything's getting pretty boring here and going sideways. In the S&P 500, it had a good up day, but it wasn't like engulfing of even these previous two candles. It certainly wasn't like the kind of move that was engulfing this entire block, just a little blip up. It's certainly not looking very bearish or very bullish. Same thing going on in the VIX. We had a big drop in the VIX, but nothing to get too excited about. Again, like, the VIX has been overextended to the downside. If you really zoom out, let me zoom out on this chart a little bit, you can see we haven't been down in this range, like I've mentioned before in shows, since pre-COVID. Before COVID hit, we haven't seen the VIX this low in this range here. Options are cheap. It's funny. It's one of these indicators that you got to keep an eye on like a hawk, because it's like the calm before the storm, when everything is just like there's just nothing. It's like all of a sudden there's an alligator wants to pop its head up from underneath, or actual storm coming, but you understand. HYT high yield corporate, I mentioned how we broke below a trend line recently, and I thought maybe we'd head down. Instead we popped above it, but not like with a green solid strong looking candle, just kind of a boring little red candle. It opened at the top of the red candle, it closed at the bottom of the candle. These candles, all these candles represent prices. They represent the psychology of people that are controlling the prices of these things, saying to themselves, well, I pay that much for it, but not that much for it. And the other guy saying, well, I'd sell it for this much, but not for that much. That's how prices are found. That's how price discovery works. You know, it's not a machine that does it. There are machines involved, but at the end of the day, it's people that are agreeing on prices, and it's highly psychological. And that's why all of these chart patterns, they're things that like people will naturally just do. Similarly to, I don't know, like following a path in the woods that's been well trodden. We all see the same thing. We're all thinking the same things, and that's why chart patterns are important to be aware of and follow, because it's getting a sense of what the overall feeling is out there in markets. So anyway, yeah, this candle represents kind of a meh. We're not totally scared off. The PCE data was not like super hot, so it's like a little bit of a relief. It's kind of like, okay, well, the Fed is not going to tighten anytime soon. There's basically no chance of tightening coming anytime soon with this current data showing complete flatness for the Fed's preferred way of reading inflation, the PCE. And on the Fear and Greed Index on CNN, you can barely get any more neutral than this. We were slightly more on the fearish side. I said I thought it was headed more into fear. It did not happen today. Instead, we just bounced slightly back towards that 50. It's almost acting like 50 is. I feel like until unemployment comes out next week, this 50 might act as kind of a magnet where it just wobbles around right here in the middle. I don't expect markets to get very greedy or fearful until more news comes out. You may have seen in headlines that I think I saw on CNBC today, they said the best day in the Dow from the beginning of the year, which is sort of significant. That's, we're closing out 5 months. That's almost half the year. It's like the best day in that long. It's like, that's such a false narrative. All you gotta do is open the chart of the Dow Jones and see that this is not that exciting. It's not even engulfing the past 2 days. Can this give excitement and have the price of the Dow Jones continue higher? Yeah, it can. I'm personally neutral. Unemployment. I'm waiting for unemployment. I'm going to say that 1,000 times until next Friday. I've been talking about TNX, the 10-year Treasury note yield, and how I was very, very surprised to see us pop above this previous trend line. And what I did was I opened this up to a weekly time frame to sort of zoom out. It's always good to do that to try to see what it looks like on a bigger scale. And we did not actually close the week above this line, and so it still gives this line more strength, even though we did break above it. From a weekly time frame, ideally we would want to see a close below 4.42 on the 10-year Treasury note, and if that happens, then this pattern of potentially working as a bear flag can finally play out with more confidence, going towards that 3.5% target range that I'm personally aiming for and highly exposed to right now. And that's all I have for you for today. Hope you enjoyed, and thank you for watching. Robschild.